Good morning, good afternoon, wherever you are. Welcome to this webinar titled Heads Up on O&M and Asset Management Developments in the US. My name is Stefano Krupu. I'm at Solarplaza and I'll be moderating this webinar. And I'll be introducing our speaker of today in a minute. 2 words about Solarplaza in case you do not know us, but in this specific case, I think we don't have to be afraid of that. Reason for that is that this webinar is really exclusively at the moment for registrants of the conference of next week. So consider this as a session before the conference starts, and imagine yourself in the conference room with a small group of people and our speaker in a minute. Therefore, I would also like to highlight the interactivity and opportunity to ask questions in this webinar. Very short the agenda, up to me to do a short introduction, which I'm currently working on. We'll have the presentation by Cedric Brehaut of Solarplaza. He will speak on the topics you can see here, and among them the cumulative installed capacity in the US by the last quarter of last year, split up in segments, states, etc. He will provide us with a market forecast for the coming years. We'll talk about the consolidation that we see in the portfolios, but also in service providers. Some major asset management O&M service contracts, wins and transfers, and of course the general opportunity to discuss trends with him. We will have plenty of time for Q&A before we end the webinar. He doesn't really need introduction, but I will do it briefly. Cedric Brehaut, the Managing Director of Solarplaza. He is, I can say, an expert in monitoring operations and maintenance, asset management of PV system, has been tracking and following this space already for years. Before he got involved in the solar industry, he spent, I think, 13 years in Silicon Valley. He is a former director of product management at Sun Edison a while ago. And since 2011, he offers consulting services to several types and various firms in the solar industry globally. Before we get to the webinar, as I said, this is a real prequel to the conference of next week, which I'm very much looking forward to. You are joining a conference next week if you're in this webinar, so I hope you're also looking forward to it. A quick thank you for all our sponsors for next week's event. Very happy that we have, I would say, all the leading companies are active in this field, involved and supporting the conference. This is fantastic. Back to the webinar for now. A couple of practical notes. Do you have any technical issues, please use the chat box on the right hand side. My colleague who's sitting in front of me is happy to help you solve all things if there is anything. Any questions or comments for the speaker, for Cedric, please also use the chat box for that. I'll be addressing the questions on your behalf, and there will be time for Cedric to go into these. So I would really say make use of this opportunity. There will also be a couple of poll questions throughout the webinar in which we ask you for your opinion and thoughts or vision. So please do participate in that. It's just a click and we can see what the audience thinks about the different topics that Cedric will address. And as usual, the question, are the slides going to be available afterwards? I think the answer is yes. You will receive an email with these recordings after the webinar. Back to our speaker of today, Cedric. I'm going to make you the speaker. Give me 1 second for that. You'll get a request for sharing your screen with us right now. The floor is yours. Go ahead.
Thank you. So let me know when you see my screen.
Yes, there we go. Excellent.
All right. Well, hi everyone. You can't say hi back, but like Stefano said, pretend you're in a conference room and we're all looking at each other. It'll be the case next week. I'll see you at the show. So today we're talking about O&M and asset management developments in the US, and I have a lot of material that I want to show you in a short amount of time, so we'll dive right into it. We'll start with the market size. And I like to show this chart. As you know, 2016 was a great year for the U.S. solar industry, and with installations that reached in a cumulative fashion for over 40 gigawatts. So it's pretty huge. And during the year itself, there were approximately 15 gigawatts installed. A lot of it, as you know, in the utility segment, 10.5 gigawatts, but also 1.5 gigawatts in the non-residential segment and 2.5 in the residential segment. So if you look at the growth curve, definitely there was an acceleration, and as you all know, this is largely due to the ITC phenomenon, where everybody thought it was going to, or was prepared for the fact that it would end at the end of 2016. So there was a big rush, particularly in the utility segment. So this is what happened. Maybe less known is the diversification of the market. California used to represent more than 50% of the market. We started seeing a decrease in 2015, and it's decreasing even further in 2016, where California is approximately a third of the national market. So the market is diversifying. You can see on this slide the next states that represent also a significant share of the market: North Carolina, Arizona, Nevada, and New Jersey. But we'll look at data a little more closely in this next slide. So the first pie chart that I want to show you here, or donut chart more accurately, is the total install base. So when you look at the total install base, California still represents over 40% of the market because it has been a key state for so long. Comes next North Carolina and Arizona, both of these states with 7%, and then Nevada and New Jersey. And then the rest of the states represent approximately 34%, so a third of the market is everything but the top 5 states. Looking at 2016 alone, the picture is different. So as I mentioned before, California is dropping to about a third, or slightly more than a third, 34% of the national market. And what's interesting is that the states that are doing well in 2016, not all of them are the same as the ones that have been doing well historically. So for example, you see that Arizona and New Jersey, that have a large install base, are being outpaced in terms of new installations by other states like Georgia and Texas. And the other thing that I want to point out here is we see all the other states, so everyone but the top 5 representing a larger share. So from 34% in the installed base to slightly over 40% in 2016 installations. I don't want to go to the next slide because I think we have a poll question there. I don't want to give the answer before we have a chance to ask. Go ahead, Stefano.
Very good, thank you, Cedric. Yeah, let's bring up the first poll question before you continue. So, people in the audience, how many gigawatts do you think, installed gigawatts do you think are 5 years or older in the US at the moment? Is this less than 1 gigawatt, between 1 and 3, somewhere between 3 and 5, or already more than 5 gigawatts that is 5 years or older? We'll give you a couple of seconds to think, first of all, and to click. I'm very curious to see what you guys think. Okay, I hope everyone had a chance to give his opinion. Let's take a look. Cedric, not sure if you can see this as a speaker. I have the bars now in front of me. Okay, excellent. So, well, the majority says it's between 1 and 3. Very good. Did you expect this?
Honestly, until you have the numbers in front of you, it's a bit of a hard guess. So the majority is conservative. Actually, it is between 3 and 5. So let's take a look at the numbers.
And that's not only utility scale, but we're talking installed capacity in general.
Correct. Yes, yes. And actually, the weight of utility scale has been increasing. So when you look at the older install base, there's not that much utility scale.
Okay.
That's the difference between the past and the present.
Mm-hmm.
So, all right,
go ahead.
To the next slide. So it's 10% of installed capacity, which is 5 years old or more, and 10% of 40 40 gigawatts, that's 4 gigawatts. So we're right in the 3 to 5 range. And let's look at what the picture looks like. Of course, it is, if you look at the installed base across all segments by year of commercial operation, since we have such a surge in 2016 alone represents more than a third of the installed base. And then gradually, as you go further in the past, then the percentages get smaller, of course. And 2011 and prior years represent 10% of the installed base. If you look at utility scale, the gap is even bigger. So the 2016 installs represent an even larger share, and the 2011 and prior represent only 5% of that total. But it still means 4 gigawatts. So that's why I like this poll question, and I like to hammer it, because if you look at pie charts, you can think, oh, it's just a small percentage, but it's still 4 gigawatts. So there is definitely an opportunity for maintenance of these plants that are getting older. We're going to take a break now from numbers. We'll get back to them later, and I will end this presentation with the forecast and up to 2022. But for now, let's go into the discussion on the landscape and the trends. And I'll do that. I'll do one slide per segment. So starting with residential. And do we have a poll question on this one, Stefano?
Let me check, Cedric.
We do.
Yes, I think we have. Yeah, let's bring it up. Thanks for reminding me. I was listening to you and distracted by that. So here we go. What do you think, what do you guess was the share of third-party ownership in the 2016 resi installation still? So the residential landscape obviously is changing, but last year, what do you expect was the share of third-party ownership installations? Is this 40 to 50%, between 50 and 60, or 60 to 70%? Please vote. If you are not sure, no problem at all. Your best guess will do. But curious what the audience thinks. So let's give you a couple of seconds again. Yep, let's take a look. Okay.
All right, interesting results. So the majority thinks 60 to 70%, and then comes next 40 to 50. Okay, so 60 to 70% is what it used to be not that long ago, but it is actually dropping. So right now, in 2016, it's in 50 to 60% range, but in the lower part, it was 52%. And pretty interesting is that if you look only at the last quarter of 2016, it was 42%. So it is trending towards the 40% range. So here, I think the majority is still, the majority of the respondents to the poll are still have in mind the picture how it was maybe a year or a year and a half ago. Things are changing pretty quickly. So if we go back to the trends, it's one of them. It's the first one, the decline of third-party ownership that has a major impact on the landscape. And what's happening is, as the third-party ownership declines, it's because we see a ramp-up of personal loans, home loans, and property assets, clean energy or PACE programs. So it's a fundamental shift. That means that the concept of portfolios in the residential market is starting to shrink, and we see a lot more just individually owned systems. It means also that we see an increased fragmentation because although the large TPO providers and lease providers also offer loans themselves, overall they're losing ground. They're growing slower than the overall market. So what we call the long tail of the market is growing faster and increasing their share over the big guys. In terms of asset management, what this means, in my opinion, is an opportunity for asset management service providers, simply because set aside a few very large TPOs and owners like SolarCity and a few others, there's a lot of small to mid-sized portfolios in the residential space, and service providers can aggregate these portfolios and offer more cost-effective management, in my opinion. So I think we'll see more activity with service providers in the residential space. And we see also some innovation there. I see new entrants in the asset management service space that are offering both portfolio and performance management services, and they can handle maintenance dispatch, so they're kind of living both in the asset management and in the O&M space. The line is blurred. And some of them even offer performance guarantees, which is very innovative and I think will be attractive to owners. I see also in the Resi space increased use of software for analytics and process automation. It is of course critical in this segment because of the sheer number of sites. You cannot go through them manually. You have to have software. You have to have automation. And on the O&M side, O&M in the residential space is a little bit of a misnomer because it's mostly maintenance and it's mostly corrective maintenance. But it's still being called O&M. It's just force of habit. There's almost no operations, what is called operations in the O&M world in residential, really issue detection and management of the staff, as well as customer support, but no control or compliance or any of the complicated things that fit the O in other segments. It's just different. The complexity is different. The complexity comes from the number of sites to manage. On the old side as well, I see that only the very large players, national scale, tend to use CNMS. It's an acronym for a computerized maintenance management system. Software, pieces of software do field service automation, they do truck roll optimization, they track everything that the technicians are doing, and all these functions. So I see large players doing this. In the coming year or two, what I think we'll see is more of small to mid-sized companies doing this as well, because it's becoming more accessible, and then there's some software companies making it more affordable too. One last point about O&M in the Resi space is that subcontracting is very prominent. There's a lot of companies that are in charge of doing the O&M, but at the end subcontract to other firms, probably even more so than in the other segments, I would say.
Cedric, your next slide is about C&I,
yes.
As we can see, and we have a poll question there as well. This time I'm not forgetting. Let me bring it up, or let us bring it up here. The question is, if it comes to C&I and storage, solar and storage in this segment, when do you see a viable opportunity for this? With viable, we mean from a financial perspective, of course, or mostly. Now already, right now, later this year, maybe towards the end of the year, or more from 2018 and onwards. And this can be if you're involved yourself in the C&I segment with solar and storage, or what you expect based on what you see around you. Please vote. We'll give you a couple seconds for this, and yeah, very curious to see what is the expectation or vision on this. Technically, I don't think there are the biggest thresholds. It's mostly the viability from a financial perspective. Let's take a look at the answers. Okay, well, you can see the same, Cedric. Almost 60% said what it will only be from next year and onwards.
That's interesting.
Yeah, is this in line with your research and findings, or?
So what I see, it's probably in line for what is happening in volumes. But as for the opportunity, I think it exists right now. It's just complex to take advantage of it. But for C&I customers, it makes a lot of sense to have a solution that includes both solar and storage, because many of these C&I customers are on rates and tariffs that have demand charges. And so for this reason alone, solar is very good for reducing the amount of energy that is being purchased from the grid, but it's not very good at reducing demand charges. When you combine it with storage, so you can now have a firm way to reduce demand charges, and that has a lot of value. So in my opinion, the opportunity is here now. But I think I would agree with the group that the opportunity translating into significant volumes of business is probably more 2018 and onwards. So that's a great segue into the slide. Get back and see if I'm under control. Yes. So in CNI, the market remains extremely fragmented. It's the most fragmented of all three segments in the U.S. Lots of companies, no real dominant players. What I found particularly interesting is that IPPs are becoming more active in this segment. Some of them have been doing it organically for a while, Constellation, for example, and then others got in through M&A. AES got in a couple of years ago or last year. EDF just got in with Grow Solar. Mitsui got in as well by acquiring the CNI business of SunEdison. So we see some activity, and these IPPs definitely see the CNI segment as a long-term attractive market, and I think the fundamentals are very strong in the CNI segment, particularly if you add storage. And again, EDF, that was mentioned previously, is investing in these solutions and believes that there's a strong opportunity there. On the asset management side, I would make the same case as for residential, is that there is an opportunity for service providers because the portfolios are not that big. And for this reason, service providers can be aggregators and provide more efficient asset management. There's a caveat to that, though, is that in the CNI segment, I think it's a very tough cost equation, because asset management is still complex. It may not be as complex as for utility scale projects, but it's still complex because there's still a lot of contracts that are different. There's customer-specific parameters. It is quite complex, and so it's not trivial to manage. And at the same time, there is not that much money in each of these projects. So I think strong opportunity, but at the same time challenge for service providers, and I do think that software can help. Once again, asset management software enables automation of processes and improvement of efficiencies, so ultimately reduce cost reductions. But I think we'll see increased use of software to reduce cost and an increased presence of asset management service providers in this segment. From an O&M perspective, I think it's all over the place. I see very large variations in the scope, in the service level and quality, and in the price. It's a bit of an obvious point, but I think it's a lot more valid in the CNI segment than in the other segments. It's all over the place. I would say that despite being all over the place, it's still healthy. There's price pressure, but you can still offer the service at the price points that are currently at the market while making money. And I do see increased use of maintenance management software for process efficiency in the CNI space. In the utility segment, we'll have a poll question, Stefano, but I'd like to do it towards the end once we reach the O&M column.
Sure. Yeah, we have, and just to remember, that those are two that follow up on each other. But please let us know when you want them up. Absolutely.
Yep. On the ownership front, PPA model clearly dominates the other segments, the other two segments, and I didn't mention it for CNI, but the other segments are split between customer ownership and third-party ownership. But in the utility segment, it's a clear dominance of the PPA model with third-party ownership. Within that picture, IPPs and a few large financial investors are dominating the ownership, and you can refer to several articles that Solarplaza posted recently in the newsletter that give a top of the players in the utility segment. What we see as well is portfolios that are reaching scale very quickly, and when I mean scale, I should put in capital letters, because we're talking hundreds of megawatts, and for many of these players, we're talking gigawatts. So these are significant portfolios. From an asset management perspective, what this means is it's a different picture because we see IPPs with large portfolios, and these companies tend to self-perform asset management. That's what they do usually with other asset classes. And so most of them do it themselves. There's exceptions. I know of large IPPs that are using service providers, but that's not the main behavior. I do see also, as for the other segments, increased use of asset management software, and it's particularly important in the utility space, maybe for different reasons. Part of it is these portfolios have been growing at such a pace that if you didn't increase automation, you would have to hire tons of people, and so that's why I see owners and asset managers, asset management companies focusing on software to improve efficiency so that they don't have to multiply the number of people, but instead make them more efficient. And there's also another aspect that drives it is with utility plants, there's a lot of liability risks if you don't do things right, and software can help make sure that nothing gets forgotten. I see signs of convergence as well in the asset management space with wind power asset management and a few other asset classes, but I would say mostly wind because it's the closest to solar. And so some of the software companies that do asset management software, they do it for wind as well, and some of the service providers too, and a lot of the IPPs have also both in their fleet. O&M. Let's talk about prices, and I think we have 2 poll questions on this.
Yep, the first one is being put up right now. There we go. People in the audience, what is the lowest price that you have seen for basic scope O&M in dollars per megawatt per year? Cedric, maybe good to clarify a little bit what we mean here with basic scope.
Basic scope would not include, let's say, module cleaning or vegetation, but it would include supervision, monitoring, and preventative maintenance, and limited amount of corrective maintenance. Not all repairs, but just going there, doing the troubleshooting, and then staying at that level. I know it's a bit vague, but believe me, it gets very vague when you issue RFPs as well. It's hard to compare scope, but I hope I gave you enough info for you to answer the question.
It should help. Yeah. So who thinks this is less than 5,000, even between $5,000 and $6,000 per megawatt per year, 6,000 to 7,000, or more than 7,000 for the basic scope as far as it can be defined on what Cedric just mentioned. Few more seconds to vote, and let's see what people think. There we go. Okay. Wow.
All right. Very interesting. So we have a third of our poll respondents that have seen less than $5,000 per megawatt per year, and then the 5 to 6 range. That is consistent with what I'm hearing out in the marketplace.
Okay.
So we'll wait just a couple seconds before the next question. Well, actually, let's do it now. I'm curious to see what the crowd thinks.
Exactly. These lowest prices are not necessarily the same as still a healthy business for the companies providing these services. I mean, we all know there's a lot of pressure on the prices. So the next question is related to this. We'll put it up right now. So for the same price levels, what do you think is the healthy minimum in terms of still having a profitable, healthy business as O&M provider? As you said, Cedric, over 1/3 thought this is, or saw prices less than $5,000 per megawatt per year. I'm curious if people also see this as still healthy. Yeah, curious for the opinion of the audience. Please do vote. We'll give you a couple more seconds and see what people think. And I'm also very interested to hear what you think, Cedric.
Yes, and honestly, when I see the answers to the first poll, I'm thinking maybe we should have had a a possible answer for less than 4, because if a third of the people have seen less than 5, maybe there's less than 4.
Wow. Well, if that's the case, I would invite people. I mean, there are also already questions coming in through the chat box on the right, but let's say this: if you've seen less than $4,000 per megawatts per year, and you can relate any comments to that, please do include this in the chat box at the right. I will comment on that. People have voted, I guess, so let's look at the answers.
Okay. Interesting. So pretty much the same, similar answers, but we have more of a consensus on the 5 to 6. Okay. And honestly, just to put this in perspective, we are all aware that it depends on the plant size and then location. There's a lot of different factors, but we're having a high-level conversation here, and I think it does give interesting results. Although we are seeing like a third of respondents were saying that they see prices less than 5,000. There's only 24% of people that think that this range is healthy.
What would you say is healthy, Cedric? Can we have some comments on that?
I would concur. I would say that when you get below the $5,000 per megawatt per year on most sites, it's becoming difficult to make healthy margins if you're going to provide a quality service, the kind of high quality service that investors expect. So what I think we'll see in the next few years, and maybe I'll go back to the slides. I seem to have lost control on my slides. There it is. So we've seen steep price declines, and in my opinion, potentially below healthy margin levels, which means that in the future we may see either prices going up or providers going out of business. Or another possibility is we find new efficiencies, new ways to do O&M that allow to do it at these prices at the right quality with healthy margins. That's a path that would be desirable. In this segment of utility scale, grid integration is becoming more and more important with grid services as well, things like curtailment, frequency support, and other aspects, power scheduling. And cybersecurity with NERC compliance is really important too. And it's mandatory for plants over 75 megawatts AC, but it'll gradually, it's likely to be applicable to smaller utility plants soon as well. Technology innovation is big, and you can see why. With these prices, providers are really exploring and leveraging any opportunity to make their operations or their maintenance more efficient. So that includes robotic cleaning. It's been around for many years, but it's really gaining more traction now and getting a little bit more mature. Drones for infrared scans are getting popular as well, and data analytics. This is a key aspect of the industry as well. So you can know what's going on at the plant and detect issues without having to have a technician go and look for it at the plant, which is very inefficient and costly. Another aspect of the O&M, or another trend in the O&M market for utility scale plants, is we see the potential for insourcing of O&M by IPPs, particularly after the initial plant guarantees expire. It's a potential. It doesn't mean it's going to happen, and I think with the low prices that we see now, there's not much incentive for IPPs to insourcing, but some may still do it for strategy reasons, simply because that's what they do. So watch out for signs of this trend in the future.
Cedric, we have a few questions that come in. Shall we take 1 minute to address a couple of those?
Yes, sure. Let's take one. Is it utility or any segment? Go ahead, Stefano. You choose.
Yeah. Well, I'll pick two at this moment. One is a question that asks, what % of installed capacity, which of course depends on per segment, is managed by third-party asset managers? And let's take then the definition of asset management as you've addressed it here. What can you say about it? Let's say
what I can say is that I don't have the stats with me. I'm working, your question is very interesting because I'm working on a new report that is focused exclusively on asset management. And so I'm hoping to have more stats, or I'm working on getting more stats on this particular question. For now, in percentage, it is pretty low because of the dominance of large players that do it themselves. But the third-party providers are gaining traction. So I'll get more specific numbers out to you and to the market in the next month or two, but it is still low, so the potential for growth is in my opinion, very large. In the utility segment, it's limited by this tradition or strategy to do that in-house, but in the other segments, there isn't such a barrier.
Okay, just to clarify, so you're splitting the reports between O&M and asset management. You have something dedicated to asset management now.
That's right. Thanks for bringing it up, Stefano. Is that until last year, the GTM research reports were combining O&M and asset management, but it's become so, it's become so large, and each segment has had different evolution with different characteristics and different players. Of course, there's an overlap, but it's still clear enough that it's distinct. So starting in 2017, starting this year, I'm going to release an asset management report in April, and then there will be an O&M report at the end of the year, so the two would be separated.
Okay, fair enough. The second question, Cedric, before I allow you to continue, is about NERC. If the threshold for this will drop below 75 megawatts AC, right? What will it likely drop to, do you think? Or can you give a range?
Okay, that's a crystal ball question. But 20 megawatts seems like a logical number that's been floating around.
20? Mm-hmm. Okay, so that would be your best guess.
But honestly, it's anyone's guess what regulators will do. So take my opinion with a grain of salt.
Of course, but still an indication. And then what will be the key implications at first if we say, well, it will be as low as 20 megawatts, which will be a big difference?
Well, the key implication is that there's only very few players in the market that are that have NERC compliance for their operations center, and it's not something that you add easily. So the immediate impact is that for anybody that's not a large IPP that already has that under their belt, it's going to make large O&M providers more attractive. So all the guys that already have this under their belt, all the First Solar, Solve, and I think NextGen has it these days. All these large O&M firms that have already their NERC compliance program in place will get a boost, as opposed to smaller providers or a lot of the EPCs that may be doing O&M right now. They'll have a choice to either put major dollars into becoming NERC compliant, or some of the business is just going to go away to the other guys.
Makes sense. Maybe a slightly ignorant question from myself. When is this expected to drop? Is it known?
I don't know.
Okay.
And I'm not going to make a guess on this one because I don't want to cry wolf. I just think that it's in the cards at some point, but I don't want to say when it's going to be because we don't know.
Let's limit the crystal ball level here. Yeah. Agree. Go ahead with the presentation.
Yep. Well, let's look at landscape consolidation. A bunch of corporate M&A happened in 2016 and 2017, and I'm not going to read through all of these ones. I'll let you do that when you get the presentation, but I'll focus on three trends that I see on this slide. First trend, out of all these, there's a lot of IPP activity. So EDF that acquired Grow Solar, Mitsui snatched Sun Edison CNI business, AES bought S Power, and then Brookfield recently acquired half of Terraform Power, plus the whole of Terraform Global, but we're not looking at global markets here, just US. So IPPs have an appetite for acquisitions. Second trend, software. You see a bunch of transactions. So MaxGen acquired Power Factors, and then Bayfor acquired EchoSoft, and then a few months later they sold it. DNVGL bought Green Power Monitor. Going the opposite way, First Solar sold Skytron Energy, and then Power Factors acquired the same EcoSoft that they had bought before. So a lot of activity here, and slightly confused activity because we see some buying and some selling. So I'll tell you what I think about that in a few slides. And the last, it's not really a trend, but it's an observation, is that on this page, there's a bunch of lines that are involving the same provider, MaxGen Energy Services, that used to be called Solaris before they rebranded themselves into one of the brands they had before. So in the beginning of 2016, Oaktree, as an investor, acquired the company, and then later on, MaxGen acquired Power Factors, and then EcoSoft, and then they also snatched the CNI O&M business from Enphase. So this company that is already one of the largest players seems to have an appetite for external growth as well, and seems to place enough value on having your own software that they bought two companies. Moving on to portfolio M&A. First, I put on one simple slide the big transactions were large asset portfolios. So in November 2016, NRG got over 500 megawatts of operational plants plus 265 megawatts of contracted projects, approximately 1.5 gigawatts of development pipeline from Sun Edison. Then in January of 2016, Longroad Energy, that's a developer, they acquired a pipeline from 7X Energy. I didn't put that in the corporate M&A slide before because as far as the way it's been communicated, it's not an acquisition of the company, it's an acquisition of the pipeline, and the two companies will still remain active. In February, AES bought S-Power, and then they split the portfolio with another investor, Alberta Investment Management Corporation. So it's a 1.2 gigawatt portfolio in operation plus 10 gigawatts in development. And then Brookfield very recently acquired 51% of Terraform Power, and that portfolio is 900 megawatts in the US. Looking at smaller, quote-unquote smaller portfolio transactions and asset transactions. There's a lot of them here, and I'm going to go through all of them. But something to allow you to read this slide faster is I put in bold font anything that's over 100 megawatts net, and I put in highlighted beige transactions that involve IPPs. So what you can see just at a glance is that about half of the transactions, maybe more, involve IPPs, and then also have, well, maybe half to a third of them involve transactions over 100 megawatts net. And maybe it's worth just pausing to explain the difference between gross and net, because some of our viewers here may wonder what the difference is between the two columns on the right. The gross capacity is plant size. That's pretty simple. Net capacity is plant size multiplied by the share of ownership that was exchanged during the transaction. So if someone owns 20% of a 100 megawatt plant, that's 20 megawatts. It's a notion that's very common and well understood in the IPP world. I think we're still struggling with it in the solar industry because it's a bit new. But in the US, with such large assets, it simply makes sense. When you have a 100 megawatt plant or sometimes a 500 megawatt plant, it may take multiple investors because it's a lot of capital and it's a lot of risk too. Or it can be a lot of risk. So you see these shared ownership scenarios, hence the difference between gross and net megawatt. Another slide, more of these transactions, again, same trend, about half of these transactions involve large IPPs, and you see the same names coming over and over again, like Southern and Dominion. And about a third of these transactions involve 100 megawatt or more. Our next slide is a little different. It's about major contract wins and transfers in the asset management and O&M world. So our friends at First Solar booked over a gigawatt of third-party O&M contracts in 2016. So that's it can be surprising news because First Solar is more known to be doing O&M on the projects that they developed or built. But these we're talking about third-party plants. So First Solar is becoming a very strong player on the third-party O&M market as well. Terraform Power, that was an interesting one, issued an RFP for asset management and O&M of their portfolio. But then they didn't select anybody, they chose to insource instead. So it points back to the trend that we were talking about earlier about potential insourcing of activities by IPPs. And in my opinion, this move makes Terraform Power closer to being an IPP. And maybe it's one of the reasons that made them attractive to Brookfield. Miller Brothers Solar, an O&M service provider in the U.S., booked more than half a gigawatt of O&M contracts. And what I found interesting as well is it's across 8 states, and there's 100 megawatts in Georgia alone. So it's one of those little facts that makes you realize how much the market has been diversifying. Another remarkable deal is EDF-RS. They won asset management and O&M contracts for a major bank's portfolio. It's about 200 megawatts. It had both utility and DG after the provider went bankrupt. So I didn't want to mention names here, but I think most of our viewers can guess who the bank is and who the bankrupt provider is. But this is remarkable because we don't hear many of these deals when there's a backup O&M provider and that backup clause is activated by the investor. So key takeaways for M&A, all these types of M&A, is that there's a lot of acquisitions and large acquisitions, both developers, pipelines, and portfolios by IPPs. So AES, Brookfield, NRG, Southern, ConAg, Dominion, Duke, EDF, Mitsui, all of these have been very active. And so IPPs are just taking a bigger role in this market overall. I also thought it was interesting to notice that yieldcos are not dead. And we see that because they're still buying. There was a time when their situation just did not allow them to buy anything, but I think these days are now behind us because you see in 2016 both 8.3 Energy Partners and NextEra Energy Partners buying assets. I see some limited consolidation activity in the O&M space, but it's not that strong. I mean, there's been some opportunistic acquisitions because Enphase is in a situation that is very well documented and decided to divest its O&M business. So NextGen snatched the CNI part, and then Sun System Technologies snatched the residential part. But it's not like there's a wave of consolidation in the O&M business. It remains pretty stable, and the M&A is pretty opportunistic so far. Software, so we talked about it a little earlier, and I think what comes out is that there's no set strategy. You see players like NextGen that are clearly investing. They bought not just one, but 2 software companies. So they think that it's important to have that as part of their company. Although, interestingly, we saw a shift in the beginning when they acquired Power Factors. It seemed to be folded into NextGen, and now it's positioned as a separate kind of sister company within the group. So I think they're putting more distance between the 2 activities, but still, the same folks have O&M and have software. And on the flip side, you see First Solar that sold Skytron. So obviously, they didn't think that it was that important for them to own the software. And then Bay4 divested from EchoSoft 4 months after buying it. So same thing. It must not have made sense for them to keep that company. So the jury's still out whether it makes sense for an O&M company to have its own software solution and development team or not. Market forecast. I promised that we'd be back to the numbers, so here we are. The picture after 2016. So you see definitely the bump here, and I created a little bit of an animation here. If you see if you consider some of the 2016 and 2017 plans as being a rush effect, a pull effect, maybe more accurately, I should have called it a pull effect, that brought some of the future demand into the years 2016 and 2017. It really is a rush or a pull, but it's not a boom and burst like we've seen in so many markets around the world, particularly in Europe, in several European markets. There's still strong fundamentals, and there's still good prospects for growth, and GTM Research forecasts that after a decrease in 2017 and 2018, as the rush is being absorbed, we'll see some growth coming back from 2018 onwards until 2022. So I think we had a poll question here, so maybe I just erase the slide and hope that people didn't look at the second column, right, Stefano?
Let's try, Cedric. Yeah, I think the last poll question for today, as you said, no boom and burst for the US, which is great, I think, and realistic expectation. When do you expect the market will reach 100 gigawatts of installed base? Is it by 2020, 2021, 22 or 23? 100 gigawatts we're talking about. It seems far away, but as the steps you just showed us, Cedric, the growth will bring us there soon. Yeah, a couple more seconds for people to vote. Will this be already in 2020, 21, 22, or 23? Let's take a look. There we go. No, people still voting. We'll give you a couple more seconds. And people are quickly calculating in the back of their minds. Okay.
Majority in 2021 or 2022. Okay.
Okay.
Let's see.
Let's see if this is in line with
GTM Research forecasting. Yeah, it's in line pretty much in 20. Well, it's probably going to pass sometime in 2021. Yeah. So that's huge. It means that we're at 40 gigawatts now, and we think it's huge. But if we fast forward in not too much time, 2021 is it's going to happen before we know it, and we're looking at more than 100 gigawatts. What's interesting, well, is that most of the forecasted installations are in the utility segment. So there's still very strong prospects. There is growth planned in the other segments as well, but it's modest growth. It's not the kind of explosive growth that we've been used to in the past. There's a lot of reasons for that. We could do another webinar just on these topics. Let's see, moving on, if I can get control of the slides. Yes, geographic diversification is going to continue, and we see the share of California dropping to 20% and remaining that in the foreseeable future. And we see also the share of the other states getting bigger and bigger. And when I say other states, it's non-top 5 states, and we'll get into more detail there. If we take a snapshot of the forecasted total install base at the end of 2022, the share of California in aggregate drops to 27%, and you still have strong states with Texas, Arizona, North Carolina, and New Jersey. So you notice that Arizona and New Jersey that were out of the top 5 recently are coming back by 2022. And then what I like to look at is all the other states. So the next 5 states plus all the others are at 50%. So that's a continued increase from what we've seen so far. And if you look at 2022 alone, they're at 38 plus 19. That's 57%. So close to 60% is outside of the top 5. This means that we're really moving from a market where the majority of the installs were in a few key states to a market where a majority of the installs is in a bunch of diverse states, and that's very healthy, and it's also good for risk diversification. And the share of California is at 20% by 2022, and you see Texas having also a very strong growth potential there. this was a lot of information, but there's a lot more. We mentioned a few of the GTM research reports. In November last year, we published a report, the last one that covers both O&M and asset management, so get it while you can. It's going to be separate starting this year. And GTM Research and SEIA partnered to do the US market, solar market insight. It's updated quarterly, a lot of great info. I also write another report for GTM Research about global PD monitoring. It'll be updated later this year. And then as Stefano mentioned, I'm doing just an asset management report that's going to be available in April. And then the next report at the end of the fall will be about just O&M. I also offer consulting services. Feel free to email me, visit my website. And Solarplaza has tons of resources. We'll all be at the conference next week. I'm looking forward to it. It's the best conference, in my opinion, period, if you're asset management or O&M. And then Solarplaza does these in Europe and Asia and Latin America as well. So if you're active in those countries, I highly recommend those as well. And the newsletter is very informative too. So lots of resources. But enough talking. Now let's take more questions.
Yes, thank you, Cedric, and thanks for the last notes as well. Yeah, indeed, time for some last questions. I have a couple of them here, which I will be reading up right now. The first one is related to I think to your last slides mostly. Let me see. And then we will have an extensive panel discussion on this at the start of the conference, but people also want to hear your opinion on this. Are you counting on the Trump administration to slow down the solar development compared to what you just predicted? Are we being optimistic considering Trump's priorities, or yeah, what's your take on that?
Well, these forecasts were done by GTM Research once it was known that the Trump administration was here, so it's factored in. But what I can say at a high level is that a lot of these installations, there's already a pipeline, there's already strong drivers. So even if the Trump administration does nothing to support solar, and I think we'd all be surprised if they did, it doesn't really impact the forecast that much. It would really take strong adverse action that would require Congress. For example, if they were to attack the ITC, that of course that would be negative, but I think it's a far-fetched possibility. So there's always political uncertainty and risks, but there's a lot of these systems, like I said, in the next few years, the pipeline is already there, the projects are underway. And even if the administration is not supportive, I don't think that impacts the pipeline too much. I think there could be more risk, for example, in the residential and commercial and industrial segments based on rates and tariffs and things that are going on at the local PUCs. But overall, I'd say that the forecast seems pretty strong.
Clear. Thank you. Next question here, and for people who still have questions in mind, there is the chance to still write them on the right-hand side in the chat box. Cedric, has the maintenance need changed as installations get older and older now? Could you give some examples, for instance, in terms of monitoring or equipment testing? What do you see?
I think we're still scratching the surface in the US because 5 years is still not that old. But we do see problems like obsolescence and availability of spare parts for some of the technology that was deployed 6-7 years ago that is no longer deployed. So it does come with its own challenges. We'll see, I think, more issues when we get past the 10-year mark because there's potentially more things that happen with the inverters and with the modules. So we're starting to get into this phase. And a lot of things are still under warranty after 5 years. What the big difference is, I think when these plants get out of their inverter warranties is when we'll start seeing a pretty big shift in maintenance activities. Because right now, a lot of these maintenance contracts, the O&M provider goes there and they're like, oh, it's the inverter, call the inverter company. That's it. Yeah. Once you're no longer under warranty, it becomes a completely different game. So I think corrective maintenance costs are going to shift and increase for those older plants.
Yep. question more focused on the residential segment. With the recent bankruptcies of the TPOs like One Roof, Longevity, what do you expect to happen to the management of these deployed systems?
That's an excellent question. Bankruptcy is so complicated that I'll have a hard time telling you. But what I can state is that there's portfolios out there, and there's assets. These assets are running, and they have a value. So whoever gets to be the owner of these assets and portfolios after the bankruptcy process will need to maintain those assets. So I think the assets and the portfolios will live on in a different way, but I don't expect them to just simply go away. So if anything, it creates more opportunity for service providers.
Okay. Another question, yeah, basic, and I would like to ask you not to go too deep into this since we have an in-depth discussion on this at the conference that you will also be participating in. So to be discussed next week, but someone is obviously asking, how are you defining the difference between asset management O&M in terms of responsibility as well? Please just mention one or two for you very obvious things, and they might of course be still debatable for other people. Just to stir up a bit the discussion that we will have also next week.
Yeah. So just in a nutshell, my perspective on it is I define asset management as commercial and financial management of the assets. There's also a little bit of there's also technical asset management, which is at the limit. It's kind of borderline gray area. And then on the O&M side, you have operations like day-to-day supervision of the plant and maintenance. So this is the fundamental difference between the two. There's some areas of overlap, but overall, the asset manager is the finance and commercial guy. The O&M person is usually a technical person. So I'm simplifying a little bit, but we'll have some slides with some detailed information and several people to debate this point at the conference, as Stefano said. There's multiple answers to that question.
Exactly. Similarly to the O&M price ranges you touched upon, what would you expect to be the respective pricing for monitoring? And if we talk about field, DAS, and central platforms, is there a trend there noticeable as strong as for, let's say, basic O&M prices? What can you say about this?
Yes, there's been strong price pressure on monitoring for several years now, and it is difficult for software companies. They have to grow to very large portfolio size in order to be profitable. So they're facing some of the same challenges as O&M companies, but it's a little easier for a software company because a lot of your costs are fixed as a software company. It's the development, and so you can get out of it by signing up more customers. It's not like O&M where you have a lot of labor, and the more plants you add, the more labor you add. So software companies are in a slightly better spot, but they find themselves in a race where their prices are low, so they have to get more scale. But to get to that scale, they have to lower their prices, and so by lowering prices, they lower margins again, so they have to get more scale. So we're in a bit of a race to scale and to low prices that is a little scary on the monitoring side as well, because it's a critical component. But they're in a bit, that industry is a little bit in trouble, and I would say more so on the utility side than on the commercial side. But there's also price pressure on the commercial side when you have large portfolios.
Fair enough. One question here, and I think we see this also in Europe. You reflected on IPPs and utilities growing their portfolios fast, so representing a big part of the growth that will take place in the market. But they are also insourcing their O&M, for instance. So the question is, how do you see that market? Will there be sufficient business for third-party O&M providers going forward?
I think so, because just the sheer market, the market is so large. to start with, that even if IPPs captured, 60% or 70% of it, whatever 30% was left would still be big. So I think there's no doubt that there's an opportunity for third-party providers. It is only part of the market. So for anybody that's doing their business plan, I would say just be careful not to assume that the entire market is available to you, because some of the IPPs will do it themselves. So there's some of the market will remain what I call captive. But overall, there's still a healthy market for the service providers.
Okay. Let's take two last questions, I would say. One, it's an interesting one, as we are also in this country on a regular basis. Do you have any information coming from Japan? Solar began there earlier than the US. I think it's a tricky question because indeed, in my opinion, Japan from certain perspectives is more mature, but from other perspectives I would argue that. But what's your take on this, Cedric? I know you're looking at Japan increasingly for your research.
Yes, that's right. So I think it's going to be deceptive because Japan's been doing this for a long time, but for the longest time their market was residential only.
Yeah.
And only very. And so on the mega solar side, I would argue that they have less experience than most markets, including the US. But they do have a bigger install base on the resi side, so it depends. What I can say about Japan is that feed-in tariffs have been historically high, so it means there's good money to be made, but in different parts of the value chain, including O&M. O&M prices there they would be a dream for any provider in the US or in Europe. So it's still a good market. Of course, as you've heard, feed-in tariffs are getting lower, so it's going to get squeezed over time, but I think it's still very healthy. And in terms of leveraging their experience, I think there's probably lessons to be learned from their residential segment that's been around for a long time. I haven't been looking at the residential segment in Japan particularly. In the other segments, I think they're probably looking at us for lessons because it started later.
Makes sense. Last question for today, at least, Cedric. Yeah, makes sense. What margins going down if it comes to O&M? What do you see as the best opportunity for decreasing the costs as a provider? Labor, obvious answer. What would you be looking at if you would be providing O&M services to stay healthy but lower your costs?
I think the three things that I mentioned in my utility scale slide, are we talking any particular segment in this question or overall?
The question doesn't say, so maybe you can answer as best as you can for overall, or if there are very specific differences, of course.
So I think the key is really to reduce labor costs, because the majority of O&M costs remain technicians that go and do maintenance. So anything that allows you to reduce that is beneficial, as long as it doesn't cost you too much. So I see all of the technologies based on data analytics that allow you to know what's going on without having to go and look at it. Maybe to even fix it remotely. All these analytics technologies, I think, are super important, and as a provider, I would look at these very closely. Drones for infrared scans, for example, I would look at closely as well, because although it's not perfect yet, there's still some regulations in the US that constrain how it can be used, but it's definitely becoming more and more effective and cost-effective as we go, and then the other thing is robotic cleaning for sure. I would look at that. Although from an O&M provider's perspective, it's a little tricky because the decisions are made during the design stage. So that would be my last point: is as an O&M provider, if you want to get better at what you do, I would say get involved sooner with your clients in the design phase of the project, so that decisions can be made that will drive O&M efficiencies.
Makes sense. Thank you very much, Cedric. Good. Let's round off. We are over time. Cedric, we'll see you next week, both on stage and, of course, at the whole conference, so people can find you there as well. So see you on the other side for this moment. For all for all the attendees that might still have questions or want to follow up with Cedric or anything else, feel free to contact me directly. I look forward to seeing you next week as well, obviously, at the conference Solar Asset Management North America, and who knows, maybe later at one of our other events coming up. I wish you a great day or evening wherever you are based, safe travels, and see you on Tuesday.